Last year, more than 11 million tourists visited Egypt, a rise of 20% on the previous year. And if the government and the private sector has its way, that figure is about to get a lot bigger.
They have a major vision for tourism. I mean, they're anticipating jumping from the current 12-13 million to 30 million over the next decade.
Tourism already plays a vital role in the country's economy. Speaking at an investment conference late last year, the minister stressed its importance.
You know that already 12.6% actually of the working force is working in the tourism sector, directly and indirectly, since we're related to 70 different other industries. And each million tourists that comes to Egypt creates already 200,000 jobs, directly and indirectly.
Yet people visiting Egypt have frequently come away disappointed with both the hassle from the hucksters at some of its tourist sites and the way these spectacular locations are presented. Only 20% return for a second visit, compared, say, to a return rate in Spain of 90%.
Take the pyramids as a perfect example, yes. I don't think, we should so much touch, the area around it, but we so much should clean the area, create easy access, create the right signage, create the right facilities around it.
The government's plan is to increase the number of tourists visiting Egypt by an extra 5 million to 16 million a year by 2014. There is the question, though, whether the country can cope with such a large influx of new visitors.
But we have to be realistic. We have to think of the infrastructure. We have to think of the roads. We have to think of the services. We have to think of the vocational training.
One solution, generating more income while minimizing the increase in numbers, is to turn Egypt into a more upmarket tourist destination.
I think Egypt, with what it offers, should go into the high category of tourism, whereby you get lower number but higher quality or payment or whatever, so that you don't deplete your assets. Because with the treasures Egypt has, I think now you have to be picky with respect to your markets.
One location where upmarket tourism has already worked is the Al Guna resort on the Red Sea. Founded in 1989, this mixed-use residential and hotel destination is now home to some 10,000 residents and caters to over 250,000 hotel guests per year.
Many tourism developers in Egypt, they were concentrating for many years on the mass market. So that means you need a lot of people to generate a certain income. But there's also a market for a high-end customer, paying a little bit more, but a little bit few customers, and generating the same revenue.
The success of the Al Guna model appears to have proven a useful template to some of the other big international developers, especially from the GCC, now investing billions of dollars into the country's tourist industry.
We started in Egypt by signing an agreement with the Ministry of Tourism in December 2006 for a development on the Red Sea in an area called Gamsha. It's a complete master plan development. One of the biggest master plans for our company. It's 30 million square meters.
One factor helping drive these new developments is the liberalisation of the country's economy, including a cut in corporate tax from 50 to 20%. The government has also made it much easier for foreigners to buy homes in Egypt, with buyers not having to pay stamp duty, capital gains or inheritance tax.
It started with so many investment incentives that were launched by the government to attract foreign direct investment. At the same time, you've seen economic growth, sustainable economic growth over the last 3 years in the vicinity of 7% per year.
Developers like Ema, who among other projects are building this mixed-use resort on the north coast, also pointed out that they found a lack of red tape when doing business here.
We had full support by the Egyptian government, and I can tell you that our permits were secured in about 3 months.
In some ways, Egypt's tourist industry is in a very fortunate position. It has some of the world's most stunning and accessible attractions. The money, both at home and particularly from the Gulf, is available to develop the business. It is up to Egypt now to decide which direction to take what is perhaps its most valuable asset, the country itself.